Hi everybody, welcome to another update on the stock screener. Today we're going to talk about Soma Gold. As you can see, the gold price might be going back and down a bit before going higher, and that will have some effect on the gold miners. But look at how strong Soma Gold is. It basically stays where it is and is moving higher. So what do I want to talk about today? Even if gold goes down from the 2050 to below 2000, you can see that the valuations don't change that much. And why is that? That's because the all-in sustaining cost is below 1000. So there are very high margins at Soma Gold. So that is very important. High margins means that the gold price can do whatever it wants. The valuations don't change that much. So the upside, this gap here from market cap to valuation is still triple. And we are going to increase production. So the valuation will go from 150 to 200. That's an entire market cap in valuation. So a double in this market cap. Just by increasing production from 35,000 to almost 50,000 by next year. So on the gold side, gold price will not change that much on the valuation, even if it crashes. But the upside is very high still due to increased production. And even then, the valuation now is already at least half of what it's worth. I think it's worth at least 100 million at the current gold price and production, and should be an easy double, triple by next year. Now, the other concern is, does Soma Gold have enough resources? That is a legitimate concern because their feasibility study only has 3 years of mine life. But let's take a look at their neighbor. So their neighbor in the south is Segovia, and Segovia is a mine from Gran Colombia Gold, which is now Aris Mining. But look at the resources. So on this chart, you can see the measured and indicated and inferred resources of Segovia in time. And this is the chart for these resources. And they started at 50,000 ounces. Yeah, 50,000 of production. That's production. And here you can see the 500,000 ounces of resources. So they started at 500,000 ounces of resources, and they grew it over time to more than 3 billion ounces. So 500,000 to 3 million ounces. Yeah, this is 3 million ounces of gold. So yeah, there is exploration potential. That's a 6x in resources. You can also see that here, 6x in resources. And with that, production also started to increase. So they probably started here at 50,000 ounces production, which is exactly where Soma Gold is right now. Soma Gold also has 500,000 ounces resources, and production is somewhere here. So this is Soma Gold, and the future is indeed going to be bright because they will increase resources like Gran Colombia Gold up this way, and probably become a 100,000 ounce producer at some point, and maybe more if they can find the resources. So this is Gran Colombia Gold here, and this is Soma Gold. I think they will find their resources somewhere here, in between Segovia and Bagre. And drill results are going to come out very soon in the coming months, I believe. So once those resources come out, probably we will see an increase in the amount of resources from 500,000 probably going to the 1 million at some point. So let's talk a bit about the catalysts. Currently, they have 3 drill rigs on site, some on surface, some in the underground, and there's 1 drill rig incoming. Just wanted to show you how this works. So you have an underground mine. This is from Gran Colombia Gold. Some of them are being drilled from surface, and you can also put the drills here in the underground and drill from here in the underground. They do not drill this deep from surface because that costs more money. So it's easier and less expensive to drill from the underground itself. So you can make more holes like this and then intersect your veins. And it's a small vein system, so it's better to drill like this than to drill from surface like this. That would cost too much money. So yeah, I think they are going to put some drills here in the underground to drill below the level 4 or 5, I think that they are now, because they have never drilled there. I think that below their current resource, there is still a lot of extra resource to be drilled out. And at this point, they only drilled the upper levels. So now they are probably going to drill lower, just like on this figure here. So that's what they're doing now. That will increase the resources, and we will see some news on that. Second catalyst is the all-in sustaining cost will be below 1,000. So we know that they are now doing mechanized mining, and that has not been incorporated yet in the feasibility study. So we should see a significant decline in the costs. So that's a catalyst for the market. Once people see that this is a high margin production, then people will start buying. The gold loan is fully repaid, so that's good. And they have so much free cash flow. I think that it will be about 25,000 free cash flow at current gold prices. So they can start repaying the long-term note, and that will start in July, which is good because there's a lot of interest on that. And the quicker we repay the debt, the more cash flow that we will have. Production will also increase from 35,000 to almost 50,000 by next year. So a lot of catalysts coming, protected on the downside due to high margins, and we have upside potential due to production increase and drilling. So this is the resource. As you can see here, we started at 100,000, going to 500,000. This trend will continue higher to 1 million, maybe even 2 million, like Gran Colombia Gold. So this is what we are looking for in the future. Let's see if they can do it. And I'll see you in the next video.